All right, guys. Welcome to day three of week five, and I hope that you have been taking the time to go over your notes and to also go to previous weeks on some of the practical things because we had gone ahead. We've talked about technical analysis and market basics, and those were the places that we talked about the strategy, right? The support and resistance and all that. And what we have been learning in week five is how to develop a trading plan because, like I said earlier, I have seen beginners courses where they overlook these things. And one thing that I suffered as a new beginner is not to have had the knowledge of what trading plan is, to be able to set my expectations when it comes to trading so that I'm not hoping to buy Lamborghini after a month of trading with my $100 account, right? So risk management and trading psychology was what we did on week four. And week five, we've been on developing a trading plan, which is very, very important. Even when you find out how to develop strategies for yourself, which I already shared some of my own strategy in week three about technical analysis essentials, where we talked about support and resistance, trend lines and channels, and then introduction to price action. The intermediate class will be where I will show you my strategy in depth, but basically for beginners course, this is all that you need to know. And I really mean it. This is all that you need to know. So you don't go on and load yourself with jargons that will not help you grow in good progression. Just make sure you go over these notes, and when we have our live sessions, make sure that you have your questions written. So today we are going into testing and back testing strategies. Now, personally, it was not until my fourth year before I came into this knowledge of testing and back testing. When I learned Forex, I just jumped into the market and man, the story was a horrible one. All right. So not so that you don't make the same mistakes and you don't go through the struggle the way I did is why we have this in our lesson. So without any further talk, let us get into it. Testing and back testing strategies. All right. I need my demonstration too. All right, right there. So you've been learning strategies, market analysis, and how to manage risk. But how do you know if your strategy actually works? The answer lies in testing and back testing. This is where you prove your system, refine your system, build trust in your trading approach, all without risking real money. This is a powerful part of becoming a consistent trader. Now, one of the advice that I got when I started trading forex from a friend that had been in the market before me, well, looking back now, I wouldn't say it was a bad advice. It's has its good part and also has its bad part. It told me not to stay on demo trading for too long. Might be a good thing, but I needed that demo season to really understand a strategy. I didn't really understand the strategy back then, but now you're opportune to understand what strategies are and how to develop them. All right. So like what I showed you in week three, where we only buy or make decisions at important levels like the support and resistance levels we are buying or selling, right? How would you know that works? Are you just going to take my word? You should take my word for it, but that won't be the way of a trader. What you ought to do is to test it out without real money first, right? That helps you understand, oh, what are the scenarios that this might work? What are the numbers of time that this works? What are the time frame on what currency pairs does this work? Right? Those are the things that you is going to be revealed to you when you take on testing and back testing. So let us get more knowledge about what it is. What is back testing? Back testing means going back in time and applying your trading strategy to historical data to see how it would have performed. Think of it as a simulation rather. You take a strategy and work it through past charts manually or using softwares. All right. So personally, the one I use is TradingView. I pay Pro to be able to use the back testing or the replay tool. on lower time frame, 4 hours, 1 hour, any time frame that I want. If I want to use it on a free version, it can only work on a daily chart. All right. And there are many tools. There is the replay, there is FX replay. It allows you to use the free function for a single pair for a particular period of time. So I think I will hook you up on that one. I will put a link in the bio or in the description of this lesson. You download it and we'll have a practical on that. I will also attach other resources on how to use the FX replay. So that is basically it. What it does is that you could be able to take the market back as if it has never happened. So you take the market back to like January, 1st of January or February, right? And you could replay and pause. And okay, this is the chart I have. This was my area, my support and resistance level. These are my trend lines. This is what I think I would do. You set your perimeters on your trading view or whatever software that you want to use, you're using to test it, and you play the chart again, then it moves simulation, right? It's called simulation. Then it goes, and if it hits your stop loss, you can pause, or if it takes your hit your TP, you can pause. Then you analyze, oh, what in my system is not working. That's just basically it. So why back test? It helps validate whether your strategy has an edge. Not all jargons that we see online on how to trade actually works. Now, also note that it's not all strategy that works all the time. For example, recently I had to retweak my strategy because of the way the market had been very, very um, voluminous these days. Volatility is so much in the market these days, and some strategies just need to be retweaked, not necessarily changed, but depending on the season and the market condition, not all strategy works out 100%, but strategy that works out 60% of the time is good enough. 50 is also good enough, right? So build confidence in your setup. That's what backtest does. It helps you spot flaws before going live. When you make a mistake, oh, I didn't wait for this confirmation. I didn't have up 3 confirmations, or this was not even a confirmation, or I took a trade in the middle of nowhere. If I had waited for it to be at a support and resistance level, like the way I do, would I have had a better chance? And better chance does not necessarily always mean profit. Better chance will mean that I will be able to manage my risk better. All right. So, and then lastly is that it gives you data like win rate, your average risk to reward ratio (RRR), drawdown, and etc. That during backtest is when you are able to know these things. And I have a quote for you: if you can't trust it in the past, you won't trust it in real time, right? Because if you have tested it over and over, in fact, I would encourage that you have a time that you test, do your back testing for about maybe an hour a day until you get hold of that particular strategy that you're trying to develop. Maybe the one you are learning from your mentor, or the one that you are learning from a course, or you get me. So that's it. So secondly, how to backtest manually. All you need is a trading strategy with clear entry, stop loss, and take profit rules, a clean chart, preferably trading view. I love trading view. If you want to get the pro, I have this they call themselves Trading Hub Nigeria, that helps us pair people together so that you don't have to pay too much for pro. Then I could link you up so that you are able to use that. But TradingView is the best for me for backtesting. And a notebook or a spreadsheet could be on your PC, it could be manually. These are all you need for backtesting. Number one, a trading strategy. This is when I enter a trade. When we talk about trading strategy, you don't have to make it complicated. There are a lot of trading strategies in the industry. But for me, as a retail trader, what I use is just the breakout and retest and support and resistance level. They've been working for me, and Fibonacci combined with that, they've been working for me, and my win rate on it is quite reasonable. I'm trying to perfect it more so that I get into the ranges of 50 to 60. But right now it's only 40%, and that means in the 10 trades, the proper risk analysis, I am able to win 4, which is still good for me right now. All right. So all you need is a trading strategy, a clean chart, and a notebook for or spreadsheet. So these are the steps. Go to an old chart, old section of the chart. Don't look ahead. Now, if you don't have the money to pay for TradingView and you're using your MT5, you could just drag your MT5 backwards like it never happened and go to a particular day. And then you move your screen. It's called looking left. You move your screen little by little to see how the market reacts on a time frame that you're testing on. It could be just 1 hour, it could be just 50 minutes, or any of those time frames that your strategy leads you to trade in. So go on an old section of the chart. Don't look ahead. Make trade setup based on your rules. Based on your rules, I'm going to be buying at support. I'm going to be selling at resistance. I don't make entry in the middle. I'm risking just a ratio 1 to 2 is what I'm looking for. So you know where those perimeters are going to be. So you record yourself. I entered at this price. You could write that down. And I'm going to exit at a ratio of this, because the reason why I'm exiting is because it's another zone or whatever. Remember that from our previous lessons. I think with 3, you should be your best friend on that. Your stop loss and take profit, your win or loss. If the trade ends up as a winner or loss, you record that down as well. And then you note your risk ratio reward as well. So lastly, you repeat for at least 50 to 100 trades to gather useful data. You don't have to sit down to do that all at once. It could be 20 at a go, it could be 10 at a go. And once you have that, it's, something that would help you to refine your strategy before you go live. So here's a pro tip for you. Track win rate, average RRR, and max drawdown. These metrics, they are gold. Once a trader knows this about their strategy, it will remember the reason why you are backtesting is to help validate whether your strategy has edge and build confidence in your setup. Once a trader has these things, they can track their win rate, their average RRR, and max drawdown. Their confidence is definitely going to be off the roof. All right, so let's move on to the third thing here. Forward testing. It's something like back testing, but it's a little bit different, right? You can call it demo testing. You can call it paper trading, meaning that you are not going to be trading on real money. So what do we have in the notes here? Once your strategy passes the back testing phase, the next step is forward testing, right? You've tested it in the past, and now you want to see how it performs in the real market, but not with real money. This means trading your strategy in real time on a demo account. I repeat, on a demo account. If there's anything I've been trying to pass in this mentorship program, is that don't be in a hurry to want to fund your account and take it to the roof. You are not ready yet. Just learn the procedures, right? I might not be able to be the one to teach you everything that you need to know, but from the light of the things that you receive here, you are able to find your edge. When you come across informations on the internet, you know how to relate with them because now you have had a good foundation. All right. So this means trading your strategy in real time on a demo account, following all rules exactly as you would with real money. All right. So why forward test? To see how you manage emotions and timing. Now, in back testing, you notice that there was nothing like manage emotions here, right? Now, a lot of traders will debate that on demo there is no emotion attached. Don't lie to yourself. There is. You are not just looking, right? Is it that you find out that you are getting greedy, you are using lot size like a thief, or you are trading a demo like the money is going to leave your bank account? You are either on any of those sides, right? But when you actually know what you are doing with a demo account, if your goal is to just test your strategy, because many people trade a demo account not testing a strategy. They just want, oh, let me see how this thing works. Let me guess a buy, let me guess a sell. But you that has a strategy you get on a demo, you know exactly what you are trying to do. I'm not risking too much. This is what I'm trying to achieve, right? So that way you'll be able to see, to manage your emotion and timing. Then secondly, to test execution during life conditions. Oh, this is what spread means now. I entered here, the market put me in here, or I click a sell, it did not enter at once. Now you are paying attention to the things that you have learned, like, oh, this is how this thing is. And the most important of it all is to build trust and discipline. This is where you learn how not to over leverage. It's okay if you open a demo and you're trading it like your life depends on it. You want to take it to $1 billion. Well, will you be able to do that on a live account? Then this is where you learn discipline. All right. So tip for effective testing: always log your results. It's not working for you if you just enter that trade on your demo accounts. Like, let me just enter. We'll check later tomorrow. What are you doing? You're wasting your time. The purpose of that demo account is so that you are able to build yourself. So you want to record them. You want to record them. Just I have a spreadsheet format that I use. Very simple and straight. Enter the currency pair, your entry position, how much you are risking. After you win or lose, you put it down. Simple as that. And some notes on how you felt when you are doing the trade. These are habits that needs to be cultivated early. Many traders, I can assure you, no longer does this because they never had the foundation, and it becomes difficult when you're already trading and making some money in the market, right? So don't change your rules midway through testing. You want to test it for that long, we say about 50 to 100 trades. And if it's now a total failure, maybe you now need to change it. But if you have not tested it well, there is no point changing it. All right. And focus on one strategy at a time. I'm sure most of you that are on social media, you'd have been hearing terms like ICT, other blocks, algorithm trading, or whatever they call them these days. You can't put all of that into one basket. No, focus on one strategy and run with it. Then the fourth thing here is that you backtest on different market conditions. The trending, you know what a trending market is? The trending market is when we are making new structure, higher high, higher low, higher high, higher low for a bullish market, lower low, lower high for a bearish market, or we are just having a ranging market, no visible high, no visible low. You want to see how your strategy performs in those places. When we have high volatility, when market are just printing big candles, or when they are just making small candles, you want to test out in most of these market conditions. And then the fifth thing is the common mistake to avoid when you are back testing or forward testing. Number one, curve fitting, making your rules fit the past perfectly but unrealistically for future trades. Don't change anything. That place that you left your support line or your resistance line, leave it right there. Don't move them a bit. You are not trying to impress anybody. You are doing it to build yourself. If it was a loss, you recorded it as a win, you are wrong. If you didn't enter the trade and say like, yes, I would have entered it, you are wrong, right? Second thing is not being honest with your entry and exit, like what I just said. And lastly, testing without structure or consistent logging. What are you looking for in the market? Are you writing them down? Make sure you do all of those. And then in conclusion, the market rewards consistency and confidence. Backtesting builds both. It's not just about finding a winning strategy, it's about training yourself to follow it. One of the mentors that I follow said that word one time, that all strategy works. It's just whoever has the mind to follow them, right? So that will be that. And tomorrow, on the next episode, we'll look into journaling and reviewing trade, so that we can finish strong on week 5. And this is what I would like you to do. I would like you to choose one strategy you've learned. Of course, the one I believe is the one I've shown you on week 3. Backtest it on TradingView. If you cannot pay for the pro, if you want to pay for the pro, reach out to me privately. If you cannot pay for the pro, just use the system that I taught you about. Looking left, just shift your chart forward, and when you are moving forward, just take it back. I'm going to show you how to do that on our live session. Please write that down in your note. And then thirdly, note the win rate, average RRR, and how you felt executing it. Please and please try to practice out some things on what you are learning. If you don't, it will not help you a bit. All right. So let's test that out before we trust what we are doing, and then I will see you on the next one. Cheers.